Very excited to get started here. You have an interesting background. You didn't necessarily start out as a tech entrepreneur, but you found your way to entrepreneurship and you've done a good job at growing your company. So maybe for the benefit of the audience, tell us about kind of the earlier part of your career, and then what led you to founding Shop Circle.
Sure, happy to do that, RJ. So you're right. I'm not a technical founder, or so-called technical founder. I haven't studied engineer, and I wasn't a developer. Although I was always like close to tech during my career. So I started my career working for an American investment bank as an equity research analyst, where I was covering TMT. And more specifically, internet companies in Europe. That bank is called Jefferies. So I was covering names that people in Europe would know better, but like such as Zalando, Ocado, Boohoo, and a few other names. And the internet penetration back then, 2016, was very high in Europe. That was before COVID. And so I always got an interest in that space, work on a number of IPOs as well, but more from a financial side. Later on, I decided that providing recommendation was a bit too boring for me. So I wanted to jump on the other side of the table and actually make decision on investments. So I stayed in the technology sector, but I moved to a venture capital firm focusing on seed and Series A investment, mostly across infrastructure, tool, and B2B software. We closed several investments, and then at some point, now 4 years and a half ago, I decided to join forces with my co-founder that comes more from an operational background, and we created Shop Circle. So that's the brief history of how I got there.
And we'll get further into the company and the solutions it provides, but I'm curious of how you found the transition from investment banking, VC, then to being an entrepreneur. Did you find that what you were doing day to day and how you had to think and how you had to operate had to change dramatically?
Yeah, it's completely different, RJ, because you're actually building something, right? Rather than providing recommendation on certain companies like I was doing in equity research, or investing minority investments, so being a minority shareholder, right? When you start a company on your own, you have to do a bit of everything, right? You need to become, especially early on when you don't have a team, you need to be an expert of payroll, how to start a company, negotiating with VC investors, hiring, launching the product, speaking to clients, and so it's very, very different. But at the same time, I think it's probably an advantage to be relatively young and not to be 25, 30 years into your career, because at that time you're still generic enough and not specialized enough into different things. So I wasn't carrying with myself the burden of like a 25 years old experience in consulting or in banking that then made you like very specialized on certain things. And on top of that, I had and I still have a great co-founder, an early stage team. So like, even if we were only like 3, 4 people at the very beginning, we were still splitting the task between like the 3, 4 of us. But yeah, the job is very different and more intense, I would say, simply because, you tend to care a bit more about things when you start them on your own and you're part of a smaller organization. And so the job is different, although at the same time, I do think that it's very helpful to have an experience in a larger organization, to understand the ways of working, to start getting some domain expertise. So if I had to do it again, I would probably do it the same way. So get like 5 to 8 years of experience somewhere and then start something on your own.
Let's jump into Shop Circle. Tell us about the solutions you provide and your target markets.
Sure. It's several solutions, right? So because we are a software group providing now more than 30 solutions. So it's difficult to summarize in one sentence. But in short, we're building the first AI-powered software group at scale. And our mission is pretty simple, RJ. We acquire the best mission-critical products centralize the heavy lifting that usually founders of this company don't want to do, and supercharge everything with AI so business grow faster, run leaner, and operate smarter. So we started 4.5 years ago with a smaller acquisition, and now fast forward Shop Circle by 4 years, we raised $90 million of equity plus pretty much the same in debt. We raised capital from all over the world, so European tier one investors, American tier one investors, always increasing a little bit our valuation. And we serve 130,000 businesses globally across different spaces as well. So on one hand, we have what we call business application, which are usually revenue driving tools such as upselling software, cross-selling, reviews management, and guided selling as well. And then we also have a business unit which focus more on the back end. So search, data, integration layers such as API management tools that keep clients stable and scalable across different platforms as well. So that's what we do. There is a lot of buy and build involved. So like I mentioned that we started with a small acquisition, and now as of today we closed 16 different acquisition, always in the B2B software space. And we have a team of 300 people, basically serving clients of all size globally.
And so do you have a mix of acquired solutions as well as homegrown solutions, or are the majority acquired?
The majority are acquired, but most of the times, the team that join us, they also created solutions before, and we have a team that focus on improving these apps 10x, usually when it comes to launching more features, launching AI-enabled features as well, improving the customer support, and a bunch of other things. So the idea is most of the times take something which has already passed the product market fit. So let's say they reach 2-3 million ARR, they're technical founders, they're very good at doing what they're doing, but they need something else to scale up. And that's usually when they join Shop Circle, and we like to build on top of something that is already existing, working with sticky clients, and we add our superpower to that. So the majority of the tools are something that we have acquired, but we don't like just to keep them alive. We like to accelerate significantly the pace of product innovation after the acquisition. And we have many metrics to prove that. And now with AI, and the adoption of LLM has become much easier as well to provide efficiencies in terms of launching new features, because most of the times these tools were more legacy driven, and all of a sudden they join a larger platform where there is a team dedicated to potentially improve the features of these tools through AI as well.
Very interesting, because presumably you have a long way to go in terms of looking at various software companies around the world and seeing if they fit under, your rubric. Is that the plan? Is that you have, currently 16 or so, and then you're planning to get to, continuously kind of evaluate prospects to acquire?
Yeah, correct. We have a corporate development team, RJ, which is fully dedicated to that. And it's not a new business model, right? So if you look at Europe, most of the successful cases in the tech space were acquisitive companies. Mm-hmm. So in Italy, where I originally come from, and you can tell that from my accent, the largest cases and success stories are acquisitive companies, what they call roll-up. There is a company called Bending Spoon, which is a huge inspiration for us. They focus on consumer products, always in the software space. They started on iOS apps, and now they're worth about $10 billion. They've been around for 12, 13 years. Then the next big tech IPO in London will be a company which is called Visma. They centralize financial tools in software space always. And then in North America, you have more than 10, 15 listed names which have more than 10 billion valuation, and they all focus on the software space. So it's a proven business model, a very liquid asset class. And you're right. So we recently closed an additional round. We have about $100 million to deploy over the next 12 months, and we're looking for tools with sticky customer base in the verticals that I mentioned before, and usually with more than 2-3 million ARR. So we have at the moment a team of 7 people, split between origination, so people that actually source the deals for us, and then people that focus on execution and integration after the acquisition. Is a core part of our business model. Organic growth is very important for us. We like to keep organic growth relatively high. But then we also enjoy to add on top, like, some growth coming from mergers and acquisition. And that's part of our DNA. We know how to do it well, and we'll continue to do it over the coming years.
And just to touch a little bit on your investors, you mentioned them at the start. It's a good group that you have. What's some of the value that they've brought to you aside from the financial capital?
Yeah, look, we have a very diverse and also like diversified investor space. So we raised 5 equity rounds over the last 4 years, RJ. Despite the multiples, and you know that because you've been speaking with a lot of software companies, the multiples have compressed significantly in the software space over the last 4 years and a half. But despite that, we always manage to increase the valuation and attract great investors to the company. So look, it's very different because as you grow, the profile of the investors also change. At the beginning, they were more focused on coaching us on how to foster the culture of the company, how to attract the best employees, and now they're much more driven on KPIs, how to get ready for potentially an IPO at some point in the future, how to optimize the acquisition process and the post-acquisition integration plan. So they're very different. We do have great investors in the US. I think the most important for our journey have been NFX, where the founder that is sitting on our board is Pete Flint. He was the founder of Trulia that sold to Zillow for a multi-billion amount. And so like he literally went all the way from, starting a company to doing an IPO and then selling it for a very high amount. And is the perfect example of someone that we can call and ask for an advice for anything because he's seen the whole journey. And then we have QED, where they are more fintech, usually former executive in the banking sectors, where they're much more focused on specific things such as M&A or raising equity and raising debt. So they usually help us on that. So it depends very much. And now we recently got a growth equity investor based out of Europe called Nextalia. And they also bring a different mentality because they obviously tend to work with later stage companies. And so they help us to prepare for what's next, right? So it really depends. But I think we were lucky enough to have great investors from the beginning of the journey, not have one investor owning the majority of the cap table. We went down the VC journey and the VC route. So giving away 20% of the capital pretty much or a bit less as we grow on every single round. And that also helped us to have different people focusing on specific works, right? So I don't like to just have investor providing recommendation on everything. We tend to, basically categorize different investors based on their expertise and ask questions mostly related to this expertise.